Good morning, everybody. Market's holding here for the moment, and see the news that occurred in Russia news spiked them higher when they were holding down there at the lows and stopped directly at what's to the left. And so now it's just stuck there. We'll see if it can get above here. If it does, it's got a void above. And we got a weekly sell setup, which is triggered pre-market here on the futures. So some jiggling going to go on back and forth here. Ultimately, the chart suggests lower. And since this has violated the trend over here, I'm thinking down here somewhere before it settles down. Of course, we're going to see how it all plays out and where today ends. Things set up as we were expecting them to when the move started up here initially. We talked about hitting the 50 MA, which it didn't. The Dow actually did and took out the prior high before it headed lower. And, while the news has been driving this market around, the historical patterns are playing out after this nasty drop that we saw and the recovery. And, so this pattern right here, whether it makes an equal high, sometimes a lower high, depending on what you're looking at, sometimes a slightly higher high. It's a pattern that plays out in all time frames, meaning after a big drop like this, it creates a void, and then there's the typical bounce from there within a bearish trend. And this is a pattern that we see a lot, where sometimes it just makes it higher high, and sometimes it makes it equal high, and now it's down. And look, whether it holds here or not, that's what we're going to see going forward. Typically, with the weekly charts like this, in any downtrend, the expectation is that it's going to break the low. And so it depends on how it goes down there, meaning should what's happening right now, the moment it just continue to go down today. Let's say today ultimately is the low of this move today or slightly lower. And then, typically follows down, breaking the low. And then you get the next bounce. And as a trend continues, in this case, a downtrend, the bounces become smaller until ultimately things tend to, get something like this daily, weekly time frame where things get relatively quiet. And then, it starts the whole process over again. And we'll see how that all plays out. Let's look at SPY. And without the 24-hour chart, big bearish down bar. The expectation is it stays in the lower half, which is right lined up with the 200-day moving average, what we call minor resistance. And as long as it stays down here, closes down here, and ideally in the lower 30% or so, the expectation is, the bias is it's going to go lower. Weekly sell setup. We got the daily lined up, as already explained. Kind of a weird pattern with the gap up, the gap down, the gap up, and so on. Pretty crazy. And then the gap down rallied up and down again. Really, what I've been calling this market for a while, Mr. Schizophrenic. But wide range bar down, and this is an igniting bar, meaning this was the consolidation after the move, and that's the igniting bar. And until we get something that points in the other direction, the expectation is, even though we're getting these intraday bounces, it's going to go lower. All right, SPX, massive juice premium on the way down here. How close you want to get? It's attractive, think of 4,300 or so. But this, if you're on the wrong side of this, it's going to hurt. And so that's why we always go for what we believe is a no-brainer, right? Which is down here at 4,200. And you could even go a little below 4,200. 41.90, 50 by 60 cents. Just pick whatever wide. So the odd, thinking is even in a catastrophe type of a situation. And big word for one day, catastrophe would mean it really came down here. And what would the news be? Well, we got the Fed meeting today, that emergency meeting it could drive it up. So this is so far away. The upside has premium up here at 42, at 42.20, 45.20, 45 and a quarter. So if you wanted to go up there, the prior bar's high is always our first reference point of overhead resistance. And the expectation is with this daily, weekly time frame, it's not going up there. Right? 200 MA, midpoint of the big wide range bar, and so on as explained. It's relatively close. So some type of news item could drive it up there. And if we were to get that kind of a bar, right, bar by bar analysis, we have a pattern here that says lower. Well, what if by some wild chance, it's a big green bar that closes up at the high? Well, that begins to change things. It doesn't totally negate it, but that's what bar by bar analysis is. Its purpose is to put the current bar in the context of what preceded it. And the deeper this retraces or closes into here, the more it begins to change our bias as to what the possibilities are. So we'll see, but premium's way down here. The odds of going down here today under normal conditions are slim to none, even though this is bearish. Because even if this comes down here, and we always look, what are our lines of defense? Well, 4,300, well, you got 4,400, which is down below. So, there's pretty big open interest there. But then you got 4,300. You got these lows over here. So the odds of coming down to 4,200, right, the next big whole number, and 4,250 will provide some support just as a midpoint number between 4,300 and 4,200. So you got lots of areas to hold before, well, if you sit through this, it's going to be, a hell day. But the expectation is with this pattern is that it's not going down there. So, pick your point. But there is premium way down there. Plus puts being closed today force market makers to buy back short hedges, right? That's what McGraw's mentioning, and 4,300 is a big level. And it's still, as we look at these big open interest levels, and just like we look at a moving average. So while, look, there's a lot of open bets here with real money, it's lined up with price support where this low is, and it's got to travel a big distance to get down there. So one of the things to look at in our analysis is how long a trip is it to get down to a level that would be a target area. And so looking at this bar and compare, people use average true range, and they can plot that on a chart. What's the average true range over certain days or day to day? It's a helpful tool with writing scans when you want to say, hey, don't show me stuff that doesn't have an average true range of such and such. And I use that in some of the scans. But you can see the size of this bar is big, right? And it came after consolidation. That's why we call it an igniting bar. Now, as we look to the left and compare, are there bars of that size? There are some that are close, but that's big. And then to get from here down to here, it's got to be even bigger. So look, we're just looking at probabilities with these put spreads where prices won't go. And unless some catastrophic type of news comes out, the odds of going down here, as I said, in the normal conditions, are slim to none. And that's what we look for with a credit spread. What are the probabilities of going to one level or not? And so as we look at the high up here, well, what's the probability of going up here? Well, a lot better. It shouldn't happen, but it's a lot better than going down here. Now, if there was credit or juice, as we call it, up above 4,600, that would be a pretty good bet, but there isn't. So down here is where we would consider the no-brainer trade to be. The markets, and this was a spike on that news. I didn't hear what the news was. I wasn't listening at the time, but this reinforces why you need software that will manage a trade for you once you're in, because in a blink of an eye, you could go from profit to break even to a loss. And so software that automatically puts in your stops, resting stops, rather than, oh, if it goes above these pivot highs, I'll press the button and get out. Well, by the time you go to reach the mouse, it could be up here. So again, just having the proper tools for being a trader, especially an intraday trader, is so important. And this type of thing, almost every software, if your platform doesn't have that kind of a tool, move to another one, because that's what you need as an intraday trader, especially where your resting stop is wherever. And so most softwares have where you have those stops or buy stops, whatever your order is, you want to get in, whatever. So when it's a stop loss. So what this platform has it. I use NinjaTrader for the futures. So it's pretty easy to set that up where your stops go in, your targets go in, and it puts lines on your chart. Just like I can drag this around, well, it can drag the stops around. And so look, if my stop is originally up here, I drag the line down above the pivots, and it's there, and it executes the trade automatically. And the same thing if it's going down in your target areas here. Sometimes you get a spike, right? You've probably been in a situation where it's like, oh, my target area is down here, this whole number 14,000, and I'll close my short when it gets there. Well, it gets there, and everybody else is looking at the same spot, and before you know it, it's ripping right to the upside again. So it's important to have the proper tools with any profession. All right, Russell, one that led the way down, beaten down. We talked about the breakout failure, and the move down here. And so it was less volatile last week. It didn't have the big down day on Friday. So it's just hanging here, but it's a bearish pattern as well. The Dow was showing relative strength, and this was one that actually made the higher high. So as this was going up, that is what I spoke about as a pattern that should play out, where this would come up, it'd make the higher low, make the higher high, and that is where ultimately it would push back down again. And it's the way of using moving averages in different ways. This got above the 50 MA. And we looked at the S&Ps before, and they didn't. So this is a way of recognizing relative strength. Now, that didn't mean it wouldn't go down. It just means that it was stronger than something else at the time. And as we look at the Nasdaq, you see it actually made a lower high, relative weakness. It had a similar pattern this morning when the news came out, where it was just jiggling around here, weak, making highs and lows. And because it was in a downtrend, we'd be thinking it's going to keep going down with this daily, weekly time frame. News came out, everything spikes up. It's at resistance. Look to the left. So far, it's jiggling around. And so in this time frame, we say, well, that's bullish price action because it's going sideways at resistance, and the possibility of getting above here, right? If longer it goes sideways, increases. Which, back to, if that happens, that premium that's down here is going to begin to evaporate. Still, it's big enough down here where it's going to still offer a trade. So if you want some of that confirmation, in any event, still, I think it's low probabilities that it's going to get down there today. Right? Nothing to do with the open. Fabio saying he scanned 800 stocks and he finds nothing to do with the open. It's, when you get this kind of big moves like that, you don't have daily patterns. The expectation is it's going to go lower, but it doesn't offer entry points. So these big giant bars, maybe something will set up on the 5 or 15-minute time frames. And as we looked at, oh shoot, why did that do that? All right, I got another one down here somewhere. All right, let's just keep going here. Bitcoin, taking a long time. Bitcoin consolidating after a nice big move up under the 200, factory work there. Still downtrend. Maybe this is where it's going to roll back over. We'll see. But this is the start of possibly making a turn. It did take out these pivot highs, major resistance, and so far consolidating. It's got work to do. Crude oil spiked up there. This is a pattern you want to be careful with, meaning it looks great, granted. But when you get a wide range bar like that after a consolidation, it just becomes such a key level. We don't know what it's going to do, but it should do what it's beginning to do now, is consolidate at the top. Just like we look at big wide bars down, it should consolidate at the bottom. The same here, but it's so close to this area in that if it goes below here, it just begins to unravel the pattern. So be careful with this pattern. And if this is an inside day today, whether it's crude oil or any other pattern you're looking at, if this is an inside day today after taking out that low the next day, odds are it'll take out that bar, what we call a breakout bar failure type of pattern. And silver moving up, looks great. It's got room to keep going. I like that kind of price action, going sideways and took out the highs again. Gold, right? This led the way up. I think last week, beginning of the week, we talked about this pattern. Basically was GLD that looked better. It was less whippy, but the bottoming tail bar, that was the big down bar that turned into a bottoming tail and the gap reversal, clearing the highs. But now we got the wide range bar, and it's moved too far, too fast, and the odds are that it begins to consolidate a bit. Euro. Wild moves in this market, very wild moves. So the dollar and interest rates, one of the things we talked about last week was how much interest rates have moved up. This kind of led the way in anticipation that interest rates would go up. And we looked at the 3-month, which finally broke out at the beginning of the year. And we talked about this last year to keep an eye on that as a heads up as to what the Fed would do. And so now, oh, you know what? I'm not going to get into this now. Sign up for MT Live. We'll be talking about yield curves and market internals on Wednesday. I'm sure you'll find it really helpful. Transports. Everything is positioned for lower, regardless of what's happening here pre-market with this stabilization. As we look at weekly and daily time frames, everything says lower. Russia looming out there or not, the Fed sometime today possibly driving prices one way or the other. Keep the stops in, create a little smaller, wait for good setups. As always, it could have some wild moves coming, so be careful. Last thing, just take a look at, just to mention, the VIX, keep an eye on levels to the left. Right, so big spike up there, came up into resistance. It's an excellent tool for a guide. Not that, you can look at the broader markets, of course, so looking to the left on spiders, Qs, and so on and so forth. But sometimes the VIX gives you a great heads up for turning points, even intraday. So set your alerts on, spike highs and congestion areas. It's an excellent tool for intraday trading as well as swing trading. To you, Dan.
Good morning, everyone. Happy Monday. So yeah, I suggest we be careful ahead of this Fed meeting today. It says it right there on the website. I put the words in the weekend letter, what the purpose of this emergency meeting is. So does that mean run for the exits? No, because it's, it's already priced in. Well, a lot of fear is priced in because everybody knows there's a meeting. And I was actually shocked that I didn't hear it once on Friday on CNBC, anybody talking about it. I was shocked. And then, yeah, the reversal this morning with the Russian news, but just view it like any other pending material news event. They could be raising today. They could be talking about a more accelerated reduction in the bond buying program, which my view. I'm shocked they're still spending a penny on bonds, putting more inflationary dollars in the market. I just don't friggin' get it. The Fed doubled their balance sheet, 5 trillion since COVID. So all our opens are fine. If you have any questions on them, I got a couple of alarms here going off of things triggering already on the weekend letter. So as always, that's what I'm going to be focused on at the open. Let's look at some gappers and earnings here and other things from my weekend scanning. CNR. Wow, I don't know what's up with this, but the gap's too big, but it's sure taken off. I mean, it could be, it's holding pre-market very well, but something that's gapping 1850, it's gapping $5. I just have a short bias. That's my bias. If it sets up, we'll come back to it. Maybe we do a naked, maybe we do a call spread or something. All right, Cortia alarm just went off. So these alarms that go off, I'll be watching them to see if 5-minute high low is valid, or if we want an alternative entry. Triple M here, I think they came out and said something about their future earnings, even though I don't know, it wasn't actual earnings, but some guidance. I mean, this is a nasty stair-stepping little descending triangle crack here. That still looks lower, but it's kind of too extended to short. MU got an upgrade, but no pattern. Sina had positive mention in Barron's, no pattern. Disney and Ford positive mention. Disney, that could be a day trade. Look at this. You had a climb-out, you got stabilization. That head is real, so it's kind of an inverse head and shoulders, and you got a price wood. I'm going to put that in a window for a day trade. Actually, I was looking at this also as a put spread. Let's see, these we're seeing these everywhere. You might see a bullish setup to ride the elevator up a little bit, but we're now fighting sell setups on the weekly. Ford, positive mention. This also looks like an inverse head and shoulder on the 50-minute chart, but you're fighting you're fighting a bearish daily. See that? Whereas Disney, you're not fighting a bearish daily. You're trading with it. Look at Goodyear Tire, bottom right here. I just saw this in Barron's over the weekend, how this thing got its head taken off. I mean, this is a real company. A Goodyear Tire. I mean, how many decades have they been in business? And look at that bar. I mean, that's shocking to me. But look at the 15-minute chart. It's gapping up and going sideways. This looks like a fantastic day trade long. 5, 10, 15-minute high. We'll see. And also, I think I've looked for puts. We'll look again. Weber earnings gapping down. Remember when this thing went public recently? Look at that, went to 20 bucks. Now it's more than half less. I have no idea, Stephen. But look at, these were breakout failure. This was an attempted. This is actually a fantastic example of many concepts. One is a bottoming pattern. One is these topping tails were attempted breakouts. Number three, you didn't have a completed bullish turn yet. And now it's kind of a bear flag, gapping to all-time lows. That's ugly. That's gonna be a call spread candidate. THS gapping up to 36. It's gapping a resistance, but it's following a CLIMO. That's a 30-minute high candidate. Oh, CNR. So it's CNR had earnings. That's what made it rock earlier. I noticed Riven gapping up here this morning. I don't know if this thing's trying to bottom or if it's a consolidation and a downtrend. So just like I said on that other one, Weber, we got no compelling turn yet. Wow, it's cooked on the weekly. It's a CLIMO, but once again, look at these three topping tails. Three topping tails. George Soros. I have never, to my recollection, have heard his name thrown around as being a moving force in the stock market. That's a first for me. I was telling Greg that, when I scanned 106 members of XRT, that I know, Stephen, I know he's a powerful rich man. So when I scanned every member of the XRT, this was actually the strongest stock in there. Grocery store. The retailers look horrible. And then also our no, not Ollie.